Welcome back to another video, everyone. I'm excited to do another oil tanker update of the week. But before we get into it, I just want to talk about the markets in general. And the markets are very weird, I would say. I mean, the Dow was up by just slightly, just by 1% this week. The S&P was basically break even, but it hit two little lows here where it was down about 3%. And I mean, the NASDAQ was down again by 3.6% for the week. And I mean, over the past month, it's just been hit the hardest at 7.6% down. Okay, so tech stocks are getting pretty shattered, and it's such a volatile time in the market. And I feel like there's a huge shift from more tech plays, high growth plays into more cyclical, value-based assets. Okay, and I would say that oil tankers, big companies, Target, Walmart, are getting the majority of that cash outflow from tech stocks into these more value plays, okay? And I mean, NAT was up on the week by about 2%, but regardless, I do think that there are other tailwinds that are making NAT stock price do relatively well over the past few weeks. Okay, and we're going to talk about all of that, but all I'm saying is when you're investing in the market, don't get freaked out by these lower prices, especially in the indexes. We've seen like over a year of tremendous growth, tremendous gains. So be greedy when others are being fearful and pulling out their money in all these tech plays. Okay, and there are broader market sentiments such as rising interest rates, inflation increases, or worries about inflation increases that are causing this change. But it may be a bit overdone. So of course, always look to deals in the markets. But I'm saying now might be a good time to invest in oil tankers, for example, because of the cyclicality and more cash into value assets. Okay, but again, before we get started into oil tankers, I just want to say please be sure to smash the thumbs up button. Definitely helps the YouTube algorithm, and also subscribe if you haven't already. Okay, you guys are awesome. So again, NAT was up by about 2% on the week. Frontline was also up by 2%. EURN was up this week by about basically break even. And DHT was actually down by, again, kind of break even, but down by 0.35%. Okay, and if we look to Nordic American tankers, my guy Herb, the CEO, said that, of course, they released their Q4 2020 numbers last Friday, and he said 2020 overall was a good year. The first two quarters were nice. The last two quarters weren't so nice. I would say he said we achieved excellent results for the three quarters, whilst the fourth quarter was weak. At this time, we clearly see a positive turn in the market for NAT Suezmaxes. Last week, we concluded a spot contract at about US 20,000 a day and another contract at 15,000 a day. A week ago, the comparable number would be USD 4,000 a day, and operating costs are covered at around US 8,000 per day. Okay, and he also bought 50,000 shares at $3.13. But again, he always fails to comment whenever he sells his shares. Okay, and let's just take the veracity of this statement. Let's compare. So they signed a spot contract for, if we average these two, so 20,000 and 15,000, that's 17,500. For their Q4 numbers, which I have right here, they actually achieved a TCE of 8,700. Okay, so this is kind of looking promising that rates are increasing. And if spot rates are increasing, that's a really good sign for incoming and future results. So they're not going to be going bankrupt anytime soon. And they also plan on, I think, raising capital by adding more shares. Okay, so it is a good sign that they're basically getting double what they got for the TCE for the fourth quarter of 2020 when tankers were hit the hardest. So I do agree with Herb in the sense that there is a positive turnaround in the market. However, I think they still might come out with negative earnings for the first quarter of 2021. But beyond that, I expect them to be hopefully slightly profitable. Okay, and I think one of the main things is, of course, that's driving this is the increase in the crude oil price. I mean, for one, we can see even over the year, we've seen a drastic increase, at its lows when it was like around $16, all the way now it's like $66 and just a steady incremental increase in the gas price. Part of what is driving this price is actually a cut in production by OPEC countries. So, of course, when there's a reduction in the supply of oil, the price of oil tends to go up. And I mean, I don't know if it's going to be stable at $66 or $70 or $80, But OPEC is looking to increase production, and that will also bode well for, of course, the Asian market and where NAT mainly operates. But even this right now, even with OPEC cutting supplies and cutting production lines, NAT is still earning good money, and so are other oil tankers. Okay, so I do like to see this rise, and like I said again, the oil tanker spot rates are closely and highly, and even the oil tanker stock prices are pretty closely correlated with the price of oil. Okay, so that's what I want to say about that. And also, it's nice to see that actually oil inventories are close to their 5-year averages. Okay, so this was based on February 26th, so about a week and a half ago. So at 484.6 million barrels, U.S. crude oil inventories are about 3% above the 5-year average for this time of year. So that's a good sign. It means that if inventories are close to the 5-year averages, this means, of course, that people are not storing oil and that demand for oil is actually quite high. Okay, so that, again, that's what I like to see. And whereas oil inventories were like way above the average if we're looking at last March. Okay, so that's again another positive sign. And of course, let's look at the weekly tanker rates. Clarkson's Plateau Shipbroking. It's brought to you by that. And again, we're seeing a positive increase in the spot rates, and I think this trend will only continue to increase. So again, if you're holding NAT, if you're holding FRO, if you're holding DHT, I recommend, of course, that you hold. I am not a financial advisor. Do what you will with your shares. I do own NAT shares. I'm down about 40%, and I will be holding these shares. Okay, and I'm hoping to see an increase in the dividend instead of, I think they paid like 2 cents per share. So hopefully we'll see a nice increase in the dividend in the coming months. Okay, so you see 10,000 for the spot rates for this week, and for the crude carriers, this is the overall trend, which was crazy high in March and April, and then just got incredibly depressed. And now we see here, you can barely see it, but it's a slight uptick, especially for the Aframax here, and hopefully VLCC and Suezmax carriers will follow. Okay, and this is similar to the results of clean carriers, but I don't cover them as much. But here it is. You can pause this and look at the clean carrier TCEs. Sorry, the clean carrier spot rates. So again, 5.6% of tanker fleet is currently used for floating storage, and that's below a couple of weeks ago. It was 6.1%. So what this means to me is, of course, ships are still offloading their oil inventories, and they're gradually decreasing, which means there's increased demand for oil. And again, that's a good sign to me, okay, because there's more production of oil, there's more demand for oil, and as the economy rebounds, I think the shipbroking business is going to be a good one to be in, okay. And so hopefully, I'm thinking that I'll even take a profit, if not make a profit, on NAT in the long run, maybe 1 or 2 years from now, okay. And I generally invest in the long run. And so for tanker deliveries, you have to note, I always talk about these, but you have to note that tanker deliveries, I'm just going to zoom out a little bit so we can see here. When you order a tanker, it generally takes 2 years to build a tanker and to produce it to build it and to produce it to the shipyard. Okay, so tanker deliveries are actually, there's a slight uptick here, and we haven't seen these amount of tanker deliveries since like around 2019. So it means that 2 years from now, a lot of these NAT, FRO, EURN, these shipbroking businesses are seeing good spot rates to come. Okay, that's a general trend. Okay, so that's nice to see. And tanker sold for recycling, I mean, it's kind of low. There's not much to say here, but here you go if you want to pause it. And finally, if we're looking at new orders of tankers, again, it's nice to see that there's a positive signal here. Okay, so that's all I have for you for the NAT and oil tanker update of the week. I hope you enjoyed. Of course, I'm seeing really bullish signals based on, some are going to call it a super cycle. I don't know if I'd call it that with oil tankers because of the increased demand for oil. And of course, when there's increased demand for oil, there's going to be increased demand for the transportation of that oil. And it's nice to see that companies are seeing positive developments and are actually ordering new tankers for the future. Okay, so let me know what you think about these. Let me know if you own NAT shares, or if you have sold them, or if you own another shares that are in the shipbroking business. So take care. I love you all. Remember to smash the thumbs up button. And if you are from Canada and you want to trade NAT stock or other stocks with zero commission, definitely check out my referral link to Wealthsimple below. It's Canada's first zero commission trading app. And I do use it, and I do have enjoyed it. And I think I might actually do a review on it. But anyways, take care. I've been talking too long. See you later, and peace out.